I was going through my weekend chart analysis and I made this big bold prediction on wheat, and I wanted to get it out here and share it with you, including the trade that I'm looking at doing. I don't think any of us can really doubt that we're coming up into food shortages. I mean, I don't think that we're being told the truth, and I think it could get a lot worse than what we've seen so far. See, right now, we're staring down the fact that this MSN article right here, the Washington Post, the summer drought, its hefty toll on American crops. It really is not looking good. I'm here to tell you right now, this year's hard winter wheat crop was the smallest since 1963. 1963. We had about 182 million people in the United States in 1963. Right now, in the United States, our population is about 329 million. That is a huge population boost. And you know what it does to the prices of food? Supply and demand. Supply is low, demand is high, prices go up. Supply and demand. You know, the rice harvest, half of what it would be normally. Tomato harvest coming in 1 million tons lower than normal. Corn harvest is the lowest in at least a decade. Carrot shipments in the United States down 45%. You know, sweet corn in the United States down 20%. Sweet potatoes down 13%. You better stock up before Thanksgiving. Celery shipments down 11%. Peach production down 15% in the United States. Almost 3/4 of American farmers are saying they have drought conditions and their crop yields are suffering. Thanks to the endless droughts in New Mexico, 43% less cows. Oregon seeing 41% less cows. Texas seeing 50% less cows. That's going to be higher meat prices. If you have other concerns about world food security, why don't you jump down in the comments and let me know right now what you're thinking and things I should look at. Everything's saying, oh, well, it's fertilizer prices. That's why farmers are having such a hard time. Let's pop over and look at this, shall we? The USDA, Foreign Agriculture Service Department, inside the USDA. It's a PDF. It's a whole report. It has all sorts of interesting charts. I want to highlight a couple of the charts out of here. First off, I saw this one right here. We did bottom out back here in 2020 during the pandemic. The prices have been on an upward swing ever since. We are approaching highs that we saw last time we had a financial crisis in the United States, back in 2008. Look at these fertilizer prices back then. Look where we are right now on this chart. Anybody see kind of the same sort of levels starting up here? Well, this builds into another thing I talked about in my Tuesday free webinar. If you want a link to that, go check it out. And this chart right here, it shows that where the major global fertilizer supplies are. Now, everybody said that the limits on Russia are causing the fertilizer to increase. Well, sure, they're a number 2 total supplier of fertilizer. But when we look across here, you know, the United States comes in high, and it's really potassium that we're jammed up on, but Canada provides 30%. Another one, you can see right here, the global fertilizer use. The United States comes in about 10.7% of the global fertilizer use. 11% of nitrogen, 8.8% of phosphorus, and about 12% of potassium. So we're not a huge demand on the international front for fertilizer. But all this brings me back to wheat futures right here. You see, we've made a big spike and a pullback. Another one, corn futures. These are one to keep an eye on. There's some ETFs for these. Another one, sugar futures. That's another one to keep an eye on. Also, we have live cattle futures, which, check this chart out. It looks like a breakout to me. Pork futures, which are pulling back just a little bit. Probably in consolidation, we might see lower prices on pork. And then we also have soybeans. Are kind of down here and look like they could go a little bit lower before they reverse higher. Now, a lot of people switched over from corn to soybeans this year, so the soybean crop may be a little bigger than corn or wheat. So that's something to keep in mind. Wheat futures, well, they can be a little hard to trade. So I found this ETF, WEAT. If we look at it on this time frame right here, we kind of bottomed out somewhere around summer of 2020. We made a low, and then wheat prices have been on a rally ever since then. Now, early in March of 2022, this year, we saw a high price in wheat, and then we've pulled back and we made a 618 retracement back here in August. This is one of my favorite patterns where price makes a high and then does a 618 retrace. If we can get a rally off of here that takes hold, then we could see prices significantly higher. This rally back here took from June 2020 up through March 2022, and if we take that and copy it and paste that arrow over here, and we can see the same kind of move. Well, that would take us right up to $15 on WEAT. That's a pretty high price. Now, how do you take advantage of that, and how long is it going to take? If I draw a vertical line right here at the end of the arrow, I see April 30, 2024. Well, that's going to take a little while, right? We're either going to need shares, or we're going to need some options that can take advantage of that time frame, or we can break up the trade into several pieces and kind of take it one stage at a time. And I'm kind of leaning toward that last option there. So what I'm going to do right now is I'm looking to buy some April 2023 options, and I'm probably going to go in the money on WEAT, say maybe the $7 strike, and that way I have a little bit of intrinsic value built up to take advantage of this move up. Now, $15 is the kind of target to begin with, but if we zoom this chart out just a little bit more and we actually get a very bullish move, say things don't go so well internationally and wheat prices actually skyrocket, well, we could see wheat prices on up there around $17 to $19. Now, looking through the option chain right here, we have several options. We could go out to January 2024 and look at the option there, or we could even go out to January 2025, but we're going to be paying a significant premium for those kind of options. So I found it best to go after April 2023, and I actually picked the $7 option right here. I paid just over $2 for mine, and I'm looking for a move up into that $15 area, or even $17, where that would be a $10 intrinsic value. And with a $10 intrinsic value and a cost of $2, that means you make about $8 of profit. That's about a 400% return right there on your money. I don't know about you and your food buying, but I got some teenagers and they eat a lot of food. If you got teenagers or other people that you buy food for, let me know in the comments about, what you're thinking about the food prices. Now, I'm looking at these prices up here on wheat, and yes, it could take out to April 2024, or it could take even a little longer before we see that. But the whole market environment is looking like this is going to be a play and we can make some money. So I hope you found this video helpful. And if you want to see some other content, I'm going to link it right over here and go check it out. Thanks for watching.